Welcome to another week of Wednesday Wisdom, and today I'm going to talk about a question that probably is bothering people even before they get started with the whole GMAT preparation. And the question is, how do I finance my MBA? So essentially, if you look at it, overall there are about 5 basic ways in which you can sponsor yourself. Number 1 is loans that are offered by the college through banks with whom they have exclusive tie-ups. So in short, if you go to ISB, you probably have like a dozen nationalized banks waiting to give you a loan, right? Or if you were to go to a top school in the US such as Harvard or Stanford, you definitely don't need to worry about getting funding in the sense getting a loan. They usually have an exclusive tie-up. Many other schools, especially the ones which are slightly lower down the order, I would say, starting rank 10 onwards, many times they don't have such a tie-up, which means they would probably be able to give you 20-30%, but not the 100%. But that is number 1 option, especially for a top school. Number 2 is you could get a loan from India. Okay, so the loans from India are collateral and non-collateral. Non-collateral loans can be offered against your admission to a top B school, but typically they are, the cap is, somewhere, less than 10 lakhs, max, but typically around 5 to 6 lakhs. If you look at collateral loans, then pretty much the interest rates that typically work, and it is going to be against property that you would typically mortgage. But the upper limit for these loans could be very high, depending on what is that you have mortgaged. So this is the second way. The third way is self-finance. Now this is something that a lot of people ignore, but when you look at self-finance, you're going to look at possibly every little thing, right? So you don't look at just the bank account, but you also look at mutual funds, look at your provident fund. If you're completed 5 years, maybe gratuity, you're looking at all the money that you've invested in other places like, bonds or fixed deposits. If you have a bike or a car, you probably will sell, you'll get money out of that. If you're living in a rented house, you probably have a deposit, so you're going to get that deposit back. It could be something even as simple as, liquidating an asset on OLX. Right? It sounds stupid, but really a lot of people sell off electronic stuff that they have got and that they may not use. So you could possibly look at getting money that way. The fourth thing is perhaps something that a lot of people do not consider. That is getting soft loans. So typically you get a soft loan from friends, family, and what is known as fools. But really you want to get loan from someone who could probably lend you like say 5 or 10 lakhs for a couple of years, and you really have your word of honor, right? It's maybe an uncle in London, right, who can give you 10 lakhs and you can always repay him once you start working. The last one is, the fifth one is scholarships. Now what happens in scholarships is that a lot of schools offer scholarships, but just that you cannot bank on your MBA just by scholarships. So you have to be a little careful on that one. Having said that, a lot of schools which, especially after the rank of 15-20, if you have a very high GMAT score and if your profile is very good, offer substantial scholarships. So we have had students at Crackverbal, and I'm happy if you contact us, we can share some profiles where they have got as much as 70 to 80% of their tuition expense waived off, which meant that the entire MBA was done in maybe around 20 lakhs. So there are scholarships. For example, there is a Reliance Stanford scholarship which offers 100% of your Stanford MBA in return of you coming back to India and working here. So there are some clauses you probably want to look at, but yeah, scholarships are definitely an option that you could consider. So in a nutshell, 5 things. You either get a loan from a college, from a bank that the college is tied up with, you get an Indian loan against collateral or no collateral. Third, look at self-finance. Fourth, look at soft loans from friends and family. And fifth, scholarships. Thank you, and if you have any questions, feel free to comment, feel free to write to us. We'll be glad to help you. Thank you.